Good morning, you magnificent melon heads. I hope you guys are well on this very cautious morning. It is Wednesday, January 25th, 2023. And the big story right now, stocks are down across the board, kind of in a big way this morning, all off of Microsoft. Now, Microsoft reported their earnings yesterday, and they were pretty good. They posted a marginal beat on the earnings, a little bit of a revenue miss. But most importantly, there was growth in cloud computing, and that is the business that really drives Microsoft right now. So initially, Microsoft stock was doing really well after the bell yesterday, but then the conference call came in, and well, we have this thing, in corporate society where they adapt some buzzword and they all get together and they're like, "Oh, we have this word. It tested very well in focus groups. We're going to say caution a whole bunch. We can't talk about recession. We can't say people are broke. We can't say customers aren't spending money in our business anymore. No, I want you guys to say caution or cautious or some derivative thereof over and over and over again." And well, it's one of the things I don't miss about corporate culture. And that was just all over the place in that Microsoft conference call yesterday, where they just kept saying caution over and over again. And well, the markets took that as the R word, recession, slowdown in business across the board. And so with that, Microsoft stock initially up 5% after the close yesterday, now down considerably, dragging the whole sector with it. We'll get into that. But first, we must shrink my big melon of a head. Grab your wake up juice and let's go through the indexes and see what's up this morning. We have got the S&P open down 47 points or 1.17% this morning. The Dow is down almost 195 points or 0.58% this morning. But the NASDAQ leading the way lower, down almost 200 points or 1.74%. Again, Microsoft is the big drag on markets this morning, taking the likes of Salesforce and other cloud companies down with it. Looking at the bond market right now, we have got mostly lower yields this morning, especially on the long end of the curve. We've got the short-dated stuff is down about a half of 1 basis point or 0.005%. But it's the long end. We've got the 10-year yield is down 1.5 basis points, the 20-year 1.6. So again, we have got all yields moving lower, but the long end moving even lower than the short end. That is even further inversion in the yield curve. That is risk piling up in the bond market. That's the bond market telling us a severe, deep recession is coming. And take a look at this one. I saw this yesterday. This is the U.S. 10-year yield. And, well, let's just zoom all the way out. This red line here is your 200-day moving average. The last time we touched the 200-day moving average was December 29th, 2021. And then on the first trading day of 2022, it's as if the whole market got together over the New Year holiday and said, okay, guys, higher rates all year in 2022. And of course, the market just moved straight up all through 2022. That is the yield, of course, that's bond prices being sold off. Never to touch its 10-year move, its 2-year, geez, it's early, folks. It's 200-day moving average the whole time. That is until the beginning of 2023. And again, it looks like all the big market players got together over the New Year's holiday and said, okay, folks, lower yields this year. Everybody go buy long bonds. Because since the start of 2023, we have seen bond yields move lower. Now, the question is, will this 200-day moving average hold? Now, if you zoom in here, we touched it a couple of days ago, bounced right off it and moved higher, but now we're heading back towards it. Are we going to hit that 200-day moving average? Across below that, in my opinion, would be a severe recession indicator, so especially after the year that we've had. Again, we haven't hit the 200-day moving average in yields since the end of 2021. Interesting trend. More to come on that. Let's take a look at what is going on here in commodities. We have got gold is down about $5 or 0.3% this morning. Silver is down a little over a nickel, 0.3% at 23.67. We have got WTI crude clinging to that $80 threshold right now, up about 9 cents this morning. We may have more to say about crude in a couple of hours. We get that EIA inventory report this afternoon, and we've had a couple of interesting inventory reports in the crude oil space. It could be something brewing there. Keep an eye on this channel for more on that. And check out natural gas with a 2 handle right now, trading at $2.97 this morning, down another 7.8 cents or almost 3%. Natural gas just continues that slide. Until we get a break in the weather, folks, we are not going to see any change in that one. Looking at the U.S. dollar this morning, we are below 102, currently trading at 101.94 for the Dixie. Up just a tick this morning, but still below 102, heading towards that 100 mark. Will we hit that? We'll know within a couple of days. All right, let's talk for a minute about this one. Here we go. Microsoft stock down 3.8% this morning. And I got to send a shout out to my man, EC660. Thank you very much, sir, for the super chat and the support of the channel. He says, so caution doesn't mean recession. No, I think caution does mean recession, EC. I really think it does. Well, let's just get into it. Again, their numbers weren't terrible. It was a marginal beat on the bottom line. Earnings were up just a little bit more over expectations. But it was the revenue that missed. But it was the growth in cloud computing. People got optimistic about that. The stock had rallied 5%. And then the earnings call came out. And shout out to Yahoo Finance. Brian Sozzi put this one out this morning. One clear theme dominated Microsoft's earnings call. And as you may have guessed, that theme was caution. Everybody got together and said, don't use any negative words on the conference call. Don't say sales are down. Don't say recession. Don't say our customers are pulling out of our business. Don't say they're reducing their spend. I want you to say caution instead. And I did a control F. The word caution, at least in this article, appeared like 15 times, or some derivative of caution, like cautious. And let's just look at a couple of the things they said here. Here we go. Organizations are exercising caution given the macroeconomic uncertainty. That was Microsoft CEO Satya Nadella. That's a soft way of saying our customers are spending less money on our cloud computing business. They're exercising caution. And just how much? Well, Microsoft had to lower their fiscal year 23 guidance for growth from 7.1% all the way down to 4.8%. They had the lowest commercial bookings growth in 5 years. U.S. in particular was weaker than expected. And an interesting point, I want to just send a shout out to Unusual Whales on Twitter. They found this one. Funny piece from Microsoft's earnings. Xbox revenue was down 12%. But LinkedIn revenue was up 10%. And I can't help but think Jerome Powell probably liked that one when he saw that. Jay Powell probably sees, okay, people are putting down the video games and they're looking for jobs. Maybe our rate hikes are having the desired effect on target. Maybe, maybe not, but I got a kick out of that one. And where is he? Steve Voitis is in here somewhere. Thank you, Steve Voitis, for your super chat, sir. He says, with a delay of 9 to 18 months, higher interest rates are not in full effect in world economies yet. Absolutely, Steve. Right on the money there. This is a lagging indicator. It's one of the problems with the Fed is they're driving full speed ahead, but they're looking at the rearview mirror and saying, well, we haven't hit anything yet. And, well, that's one of the reasons why the pivot is not really a good thing for most people. Most people are saying, oh, I'm going to buy stocks and the market's going to rally because the Fed's going to pivot. You go back through history and look at previous Fed pivots. The Fed doesn't pivot until after something really bad happens. And if you're saying the Fed is about to pivot, then what you're really saying is something really bad is about to happen. And you don't want to be owning stocks if that's the case. So thank you, Steve. Appreciate the super chat, sir, and the support of the channel. You are a gentleman and a scholar. Getting back to the Microsoft conference call, here's a couple of more. They're saying customers are being a bit more cautious given the macroeconomic headwinds out there in the market. What we see is optimization and some cautious approach to new workloads. That was another one. Optimization, right? It's a positive word. It evokes such good feelings. It tests so well in focus groups. But what they're really saying is customers can't afford to use our business, so they're cutting back. They're spending less with us. They're optimizing. They're being more cautious. Again, this is this corporate doublespeak. I don't miss it, not one bit. What else we say here? We see their CFO, Amy Hood, said, we're seeing customers exercise caution in this environment. However, performance in the U.S. was weaker. Ad market spending remains a bit cautious. Customers are more cautious in their spend. So, again, these are totally obedient morons that are just regurgitating prepackaged talking points. But what they're really saying, we're talking about cloud computing here. Cloud computing is used all over the place in the economy. So when they're talking about their cautious customers and they're optimizing spend, they're saying across the economy, there is a slowdown in spend in cloud computing. So to me, this is screaming recession. And this is what the market sees. All right, guys. Also going on this morning, we had Boeing earnings came out. Boeing had a miss on the top and the bottom line. Their stock not doing so good this morning, down about 1.2% on that. Boeing is recovering a little bit from the 737 MAX fiasco. They are seeing an uptick in plane sales, but not enough to change the financial direction of the company for now. So with that, we are going to wrap it up there. I want to send a shout out real quick. Thank you to Mike Bender for on Benarsi Models. Also says, still higher. Debt ceiling means number go up. I'm still going to hold you to that S&P 4400 number you gave me on Friday, Mike. We'll see if that one is coming. The 10% higher rip that you said a couple of days ago. But thank you, sir. You are a gentleman and a scholar for the super chat and for the support of the channel. I want to send a shout out to my Patreon supporters. Thank you guys for everything you do. Looking forward to talking to you guys today on our Zoom call at 5 p.m. Eastern Time. There is a link down below to Patreon should you feel so inclined. Hi, Mom. Hi, Dad. And until next time, live small and dream big.